Hello and welcome back to another episode of Majlis and Markets. I'm your host Hassan Jivraj. Majlis and Markets aims to bring you thought-provoking conversations with influential leaders in Islamic and global markets. As usual, wherever you're listening to this podcast, please remember to like, share and subscribe. It really does help us. In today's episode, we're exploring the world of sovereign wealth funds. Over the last 2 decades, sovereign wealth funds, particularly those from the Gulf, have emerged as significant economic players. With Gulf sovereign wealth funds holding nearly $4 trillion in assets, they wield considerable influence on both local and global economies, investing across sectors like finance, infrastructure, and even sports teams. But what challenges do they face? Today we're joined by Diego Lopez, founding and managing director of Global SWF, an advisory firm specializing in sovereign wealth funds and public pension funds. With over 18 years of experience advising sovereign wealth funds worldwide, Diego shares his insights on the current landscape of Gulf sovereign wealth funds, their investment strategies, and some of the challenges that they face. Diego Lopez, welcome to Majlis and Markets. Good to have you here.
Hi, Hassan. Eid Mubarak, and thank you very much for having me here.
Eid Mubarak to you, my friend, and thanks a lot for taking the time out of your schedule. Diego, I came across your research when I was doing an article for a publication at the back end of last year, and it was really interesting reading about sovereign wealth funds. And, obviously sovereign wealth funds are becoming really important or have been very important in the Gulf region. But before we get on to sovereign wealth funds and why they're important and, the Public Investment Fund in Saudi Arabia, I really want to get a take on your background and learn more about your research. Could you tell me a little bit about your story?
Yes, absolutely. Very happy to. So, by way of introduction, I'm originally from Spain, as my name, my accent suggests. I grew up in the small Canary Islands next to Morocco, and both my parents were or are university professors. So the academic blood really runs in the family. But I somehow ended up studying economics first, and then finance at the London School of Economics or LSE, and working for capitalism around the world. So I spent most of my career in between Madrid, London, New York, Hong Kong, Singapore, and more importantly for this podcast, Qatar and Abu Dhabi.
Great. And can you tell me, what do you do? You're at the Sovereign Wealth Fund, Global Sovereign Wealth Fund, right?
Yes, exactly. So I spent most of my career in Big Four accounting firms, so in KPMG and then PricewaterhouseCoopers. But in 2018, I decided to start my own firm, which is Global SWF, and we focus purely and solely on state-owned and investors, which include sovereign wealth funds and also public pension funds and central banks.
Fantastic. And how did you get into researching about sovereign wealth funds?
Well, that's something that it really started in Qatar when I moved there in 2009-10. And if you know much about Qatar, most of the economy rolls up into the sovereign wealth fund. So when you are an advisor there, most of what you are chasing after is related to the sovereign wealth fund. So I was really interested. I started reading about sovereign wealth funds not only in Qatar but globally, and I became a sort of a thought leader. And then I eventually kept working in the area, whether it was in Hong Kong with the Chinese state-owned investors or back in Abu Dhabi when I was running the sovereign wealth fund team in PwC. So very much throughout my career, I started focusing on this space that is very unique and I find fascinating because it's at the crossroads of politics, economics, and finance globally. And I think they have become very important over time, especially during times of crisis.
Exactly. I agree. Diego, when we get into the specifics about sovereign wealth funds, for an outsider or for someone who doesn't know too much about a sovereign wealth fund, before we talk about the Gulf sovereign wealth funds and where they are today, could you kind of walk me through or help our listeners understand what exactly is a sovereign wealth fund?
Yeah, absolutely. And I think the definition is something that varies and it has evolved over time. I mean, if you look at the most formal definition of sovereign wealth fund, it's dated of 2018, and it was issued by the International Monetary Fund. But if you look at that definition today, it doesn't really apply. So we have an alternative definition, which is basically any pool of money, which is partly or fully owned by a government, whether it's a state level or federal level, that buys, sells, or holds securities and assets in pursuit of financial or economic returns. We try to use this very broad definition because if you stick again to that definition that the IMF issued in 2008, you would be left with only 30 or 40 sovereigns around the world. So it's very narrow because it predicts that, well, it sort of advocates that the sovereigns should only invest overseas and they will only come from foreign reserves. So today the industry is much more complex. So you have sovereigns that are investing solely domestically, and you also have sovereigns that are not coming from foreign reserves, but are actually formed out of holdings. So again, very different industry in the past 15 or 16 years and very complex, which requires us to be very broad in our definition of a sovereign wealth fund.
Yeah, and I remember hearing about sovereign wealth funds back in 2008 when I was an undergraduate student at university, and you heard about the Qatar Investment Authority saving the likes of Barclays, or providing a large capital to companies or institutions which were in a lot of fiscal trouble. Why would you say sovereign wealth funds are important in the economy, or in the global economy rather?
Yeah, absolutely. I mean, that was one of the showcases of the importance of sovereign wealth funds, right? So, I mean, just to give you an idea, today sovereign wealth funds manage around 12 trillion US dollars in assets, and together with central banks and public pension funds, they stand for about 50 trillion. So this is almost half of the asset owners worldwide. I mean, if we take into account the mutual funds, the private pension funds, etc. So it's almost half of that industry. But not only that, but they can also afford to be very long-term, patient capital, and they can also afford to be contrarian investors. So, whenever we had the global financial crisis or when we had the COVID-19 crisis, the role of sovereigns really was highlighted because they were able to invest in things that really needed investment from. So in the first case, it was obviously the financial system. In the second case, it was more like ports, airports, aviation, even healthcare. So they took a very active role in COVID-19 as well. So very contrarian investors, very long-term thinking, and very sizable in nature. So overall, very important aspect of the asset owners industry.
Yeah, they've definitely become important economic actors in the last, say, 15 years, as you said. But even before going into Gulf, the largest sovereign wealth fund, from what I understand, is in Norway, right? Is Norway the largest sovereign wealth fund?
It is, yes, it is today. So if we look at the pure sovereign wealth funds ranking, I mean, if you look at the top seven largest sovereign wealth funds in the world, I would say all of them but two have a but, and I will explain. I mean, if you look at Norway, they do have the largest sovereign wealth fund on earth, and it's about 1.5 trillion US dollars, but it's very liquid fund. So 97% or 98% of that capital is actually deployed in bonds and stocks globally. So it's more of an industry, like an index tracking, if you will. Whereas if we keep going the list, the second one in the list is CIC, or China Investment Corporation, but two-thirds of that capital is actually in a subsidiary called Central Huijin, which invests purely on Chinese financial institutions. The third sovereign wealth fund is called SAFE, also Chinese vehicle or State Administration of Foreign Exchange, but that capital is channeled through subsidiaries in the UK, in the US, and Singapore. But then we keep going. The fourth one is ADIA, and I think ADIA is the first one that is really a pure overseas investors that is one of a kind. So it's almost $1 trillion, all invested overseas, outside of Abu Dhabi. and that makes it to me the largest and most interesting sovereign. And then you got PIF of Saudi Arabia, which again is almost $1 trillion. But if you think about it, almost 360 billion of that capital. I know that we will focus on PIF later, but a third of that capital is actually in Aramco shares. And then 80% of the remaining AUM is also invested in the kingdom. So overall, only 100 or 120 billion out of that capital is invested overseas. And then you got Kuwait, which has the same sort of challenges with various sub funds and investor mainly through funds. So they are not a direct investor, they only invest through funds. And then the seventh one finally is GIC of Singapore, which similar to ADIA is almost $1 trillion. We have it under 800 billion, but they are reporting results in a couple of weeks. We expect it to be very positive. So it's almost $1 trillion also invested overseas. So they don't invest in Singapore. So this is a long way of saying that to me, ADIA and GIC of Singapore are actually the two most important and direct investors among the sovereign wealth fund community.
Yeah, I think I read your report at the end of last year saying that like Gulf sovereign wealth funds, including ADIA, there's collectively about $4 trillion within the Gulf sovereign wealth fund space. Is that right?
Yeah, absolutely. So in the Gulf, particularly, there has been a huge increase in AUM in the past 2 years, basically because of the oil prices. So as you know, the average oil price in 2022, I think it was $99. In 2023, it was about $80. So that's all above the fiscal deficit or the break-even points in the GCC, and that made it or that sort of generated a huge windfall that went into all these sovereign wealth funds. So we've tracked that increase, and we predicted that it's going to keep increasing up to, I believe, it's 7 trillion by 2030.
Yeah, no, definitely. I think they're important actors and players for economic diversification within their own countries as well as their own external investments. When we look at ones like the KIA, the Kuwait Investment Office, which I think is before the KIA, it's been there for like a long time. Would you say Kuwait is probably or the Kuwait Investment Authority rather is the oldest and largest sovereign wealth fund that there is? Well, before what your research was showing.
Yeah, it's a good question. I mean, we get that a lot because they actually say in their website that they are the first sovereign wealth fund, and it's interesting because I did a workshop with them many years ago in Kuwait. I think 12 years ago, if I'm not wrong, and they were very proud of saying that when Abu Dhabi set up ADIA, they actually went to Kuwait to ask them for advice, and when the Norwegians set up GPFG or MBIM, they also went to Kuwait to ask them for advice. So they're very proud of saying that they're the first form of sovereign wealth fund. Academics will tell you otherwise. I mean, there were some early forms of a sovereign wealth fund in the early 19th century in the US, actually, when some states like Alabama, Mississippi, Ohio, and Texas, particularly, form land trust funds to finance the public schools, basically. So the state would lend out the land, and they would create a trust fund that was actually invested in securities. So it's an early form of sovereign wealth funds. But if you look at Texas Permanent State Fund, which is still standing today, it was actually set up 100 years before Kuwait Investment Board in London. So again, they are very different funds, and I think Kuwait can keep saying that they are the earliest form of a sovereign wealth fund in the way that most people know. It was just that U.S. states also had some or similar forms of state-owned investor as well.
Yeah, no, if you look at the Kuwait Investment Authority, it's a very political in terms of like changing anything or doing any like amendments. It's quite a political issue in Kuwait, and obviously, I'm not sure if you're aware, but like Kuwaiti political scene's been quite active in the recent years, and Um, would you say there's like a difference between the way, say, ADIA, PIF, and the QIA and the KIA? Which one would you say is like more aggressive in terms of its investments? Would you say there's one, or do you think it's mixed across the board?
Yeah, I think, as you said, I mean, KIA is very sizable as a sovereign wealth fund, but has always been challenged by this form of politics that stands in Kuwait. And I believe that you had an earlier podcast on this alone, so I won't delve too much into it. But any sovereign wealth fund expert needs to understand politics because politics affect the way that sovereign wealth funds conduct their business and their investments. So I think KIA has definitely been challenged by the democratic element that stands in their parliament today. Because every time that there is a change in prime minister in Kuwait, that has an effect in both KIA and PIFs, which is the public pension fund in the country, and the way they conduct business. So that's why I think KIA has remained as a fund investor. So they are only able to allocate or to commit capital through fund managers rather than being a high profile direct investors as others in the region are. So just to address your question, so I think obviously QIA out of Qatar was very prominent direct investors. I mean, some went to say that they were interested mainly in trophy assets because of the kind of assets they were investing, whether it was Harrods or it was the Shard, or many of them were in the UK, right? I would say that that has changed over the years, and QA is now, a 20-year-old sovereign wealth fund that is much more mature, much more sophisticated, and much more thoughtful in what they invest in. But others in the region, like ADIA and PIF, are definitely high-profile investors that the media loves to talk about. But we keep seeing as the most active investors. I mean, in our annual report, just to give you an idea, we call them the Oil Five, and this is basically the five most active sovereign wealth funds in the GCC. Three of them from Abu Dhabi, so ADIA, Mubadala, and ADQ, and then QIA out of Qatar and PIF out of Saudi Arabia.
Yeah, no, definitely. Diego, another thing that I found really interesting in your research, and also from I think Bloomberg wrote an article about this in August last year, was the deployment of funds from the Gulf. Although there's been narrative that Chinese investment or Chinese trade cooperation, Gulf and China trade cooperation is happening, a lot of, or 75% of the money from Gulf sovereign wealth funds is still going to US equities. That I found that like really interesting. Like, how come they still, rely on the US for this?
Yeah, I think on the one hand, they have to invest wherever they find opportunities, right? And if you look at any deck or any desk, sorry, of any investment manager within those organizations, probably I would say 70 or 80% of all the investment proposals they receive are from the West, whether it's Europe or the United States, just because the markets are normally bigger and there are more bankers that are actively pursuing investments. So they have traditionally have a lot of weight in the portfolios. I mean, if you look at ADIA today, I think it's 52 or 54% of their portfolio sits in the US. So for years, I think they have tried to diversify that portfolio and to become more active, specifically in Asia, because as you know, a lot of growth will come from Asia in the next decade. But it has been challenging. It has been challenging because of the lack of opportunities or because of the regulatory or tax regimes that they find in these countries. So I think a lot of debate has been going on about China and whether sovereign wealth funds are investing more or less in China. And you got investors like Norway that are pulling out of China because of optics, basically. So they're normally more accountable for their citizenry, and therefore they have to keep a good optics by closing the Chinese office or weighting down the China portfolio. But again, I'm going to my previous point. Gold funds can afford to be contrarian because they are not as accountable to their citizenry. I mean, nobody's going to tell them whether they should invest more or less in China. But secondly, they see the opportunities. I mean, they see that the market is actually not going anywhere, and they can pay good prices now for good fundamentals in the country. So my belief is that they will keep investing in Asia in general, including China in the next few years.
Yeah, no, definitely. I think we had Tim Callan on, who was the former IMF chief to Saudi Arabia, and when I asked him about that, his answer was basically that a lot of Gulf investors still prefer the US equity market, given its depth, its liquidity, and protection or take withdrawal of capital. But one thing I wanted to ask you, Diego, was that you mentioned earlier on that the Gulf sovereign wealth funds, or sovereign wealth funds in general, they invest in different kind of securities. So it's not just equities, right? They invest in things like bonds or infrastructure. Increasingly we're seeing, I think there was a deal between Mubadala and Goldman Sachs launching a private credit fund for India. Like, can you maybe talk a little about the kind of other investments they invest in?
Yeah, absolutely. And it is a journey, right? For every sovereign wealth fund, the investment process is a journey. So normally they would start by investing in securities. So whether it's fixed income or public equities, and they can do that through external managers, or with time having the traders in house. Once they get comfortable with those with capital markets, they can basically they typically move into real estate, because brick and mortar is an area that they understand very well. It's an asset that they can see, they can touch. So I think they have become very important real estate investors over time. And then normally, infrastructure has arisen as an aspect of real assets. So they would start investing in infrastructure, things like transportation, energy. And then they would typically move into private equity, including some more aggressive forms of private equity. So, I mean, venture capital to start with. So, over the years, I think some of the Gulf investors have become very prominent investors in startups and in venture capital funds, but also in private credit. I mean, private credit, as you mentioned, has been something that has been recurringly in the press for the past 2 years. I think it arises as an alternative to capital markets when the financial markets crashed in 2020. So in 2020, both bonds and stocks went down over 10%, which hadn't happened in 50 years, right? So I think private credit was an alternative to that traditional asset allocation, if you will. And since then, we have seen a lot of partnerships. I mean, it's not only Mubadala with Goldman, but we've seen, from Credit Suisse to Wells Fargo to Blue Owl to, all sort of Western capital teaming up with Gulf investors and putting money to work in private credit. And this is, by the way, in both domestic markets. So it's also in GCC and also overseas. So there's an element of FDI, so funds trying to attract capital into the GCC as well. And there is another aspect of bringing the know-how. So by teaming up with consolidated private credit investors, they can understand the asset class better. And in the future, they will go on their own and invest in that asset class. So over time, as you can see, the asset allocation has got very complex in all these institutions. But again, it's a journey. So some of them may be at an earlier stage, and some others, like, again, ADIA, that are now 50 years old institutions, they can afford to be present in every single asset class out there.
Do you see like Gulf sovereign wealth funds, like the ones like PIF did SoftBank teamed up with SoftBank? Do you think, and obviously they invested in things like WeWork. Do you think like Gulf sovereign wealth funds don't really like startup investing as much as they used to compared to say like private credits or like fixed income?
Yeah, that was honestly, that was a one-off. I mean, it was an unparalleled deal that SoftBank got. I mean, they got 60 billion out of PIF, which was 45 billion, Mubadala, which was 15 billion. And it was really unparalleled. I mean, if you look back, Mubadala didn't even have a venture capital arm. And they basically set it up to manage that 15 billion commitment that they have with SoftBank Vision Fund. and they got exposure to not only to WeWork, but to startups in every single continent, thanks to SoftBank. Now, most of these or some of these investments may not have been, successful, but at least they went through the journey of understanding venture capital, and they now have raised even third-party capital through Mubadala Capital, and they're doing ventures on their own. So again, it is a journey that funds go through. Normally, they would have to rely on external managers at first, but as they go along, they will start being active investors on their own. So most of the Gulf investors now today invest in venture capital on their own, whether it's in their own name or setting up subsidiaries such as Mubadala Ventures or Tacnia and Jada Fund of Funds in the case of PIF. But yeah, I mean, this is an area that we have seen a decline in the past 2 years, I would say. Venture capital has not been as popular, but I don't think it's going anywhere. I mean, I think we will talk about EV and AI later on, but venture capital is very much associated to innovation, and I don't think it's something that sovereign wealth funds can ignore.
One thing I wanted to ask you was, last year I think public investment fund in Saudi they issued the first green bond, which I think they touted as the first green bond issued by a sovereign wealth fund in the world. And sovereign wealth, PIF, and some of the other institutions have, like Mumtalakat in Bahrain, have issued bonds and loans. Like, why do they need to seek outside capital if they're using the money from oil windfall or from the energy windfall to prop up their balance sheets?
Yeah, that's a great question. I mean, I think we've seen PIF raising over $8 billion in green bonds in the past year and a half, and that's really unparalleled. But I think it has to do with their mandate of making their capital sustainable. And when I say sustainable, I'm not saying environmentally friendly. I'm saying resilient to long-term crises and to the absence of resources whenever they're finished in their respective economies. So they are very aware that the sources of wealth are finite, and that one day they will need to be diversified in terms of sources of capital. And therefore, that aspect of attracting third-party capital, whether it's debt or equity, has become key to some of them. So as you said, Mumtalakat has raised capital for a long time now. PIF, Mubadala has also raised capital. And they need to be more transparent. And again, I think we're going to talk about transparency later, but that's one of the reasons that the sovereign wealth fund industry is changing over time in the Gulf, is because they need to be more transparent in order to attract more foreign direct investment into the GCC and be more sustainable and resilient in the long term.
Yeah. Speaking about the PIF, one thing I wanted to talk to you about, the PIF has been around since the 1970s, but it's probably fair to say that they've only really started gaining prominence within the international media since 2015, when Mohammed bin Salman came onto the scene, and since 2017 or 2016, when Saudi Vision 2030 came out, this ambitious plan not only for the Saudi economy but for the Saudi society to move it away from the oil reliant economy and to make it a more diversified economy and society. I mean, PIF, to me, it seems like a lot of the projects that are taking the so-called giga projects, which people talk about, is being done through the PIF. Do you have any high-level thoughts on like what you think about the PIF within Saudi's economic diversification efforts?
Yeah, I mean, it's unbelievable, right? What they are building, and I think the way that Saudi is managing the public finances is very different to how Abu Dhabi is managing their public finances, right? And we talked about it in our annual report, and we call it the Saudi approach versus the Abu Dhabi approach. And I'll explain. The Saudi approach is basically saying, okay, we have a vision, which is Vision 2030, but actually it's going to be carried out solely and ultimately by the PIF. So every single initiative in the country, except for a smaller role of NDF, which is the National Development Fund, is going to be carried out by PIF or PIF subsidiaries. So it's really, people call it the brainchild of MBS, but actually it's at the core of the Vision 2030. That's why it's so important to grow it. And you see any initiative, whether it's giga projects or domestic real estate or domestic bonds, domestic equities, or any investment that they do overseas, is got an angle for Vision 2030. So we were talking about Lucid Motors before. It's so important that they invest in electric vehicles overseas because they are developing an electric vehicle industry domestically. So PIF is really become that key centerpiece of Vision 2030. On the other hand, Abu Dhabi is very different, right? So Abu Dhabi has an array of sovereign wealth funds and lately private offices that each one of them is tasked with a different aspect. So if you look at ADIA, again, almost $1 trillion, only tasked with financial returns overseas. You compare it to Mubadala. Mubadala is a conglomerate of industries that study as a border of knowledge versus investments in the 2000s, but that has become more international investor as well. But now you got ADQ that started as an investor in industrial conglomerates, also becoming an active investor. But each of them has a very, I would say, defined mandate within the ecosystem of Abu Dhabi. And each of them was traditionally managed by a different brother that has sort of consolidated into two main brothers today, Sheikh Mansour and Sheikh Tahnoon, under Sheikh Mohammed after the passing of Sheikh Khalifa. But bottom line is that the way that capital and public finances are managed in the Gulf differ from each other. So we talked briefly about Bahrain before. So Bahrain follows the Abu Dhabi model, and so does Dubai. So having different funds for different purposes, whereas the rest of the Gulf, so Oman, Kuwait, and Qatar follow the Saudi model, which is having a single umbrella to carry out all the mandates, whether it's domestic and overseas.
One of the things that I found really interesting within Saudi is that, a lot of the private sector activity taking place is facilitated by the PIF. And, when I've asked people about the PIF's over-involvement, do you see this as a potential medium or long-term risk that, if PIF is too involved in the private sector, it crowds out the other pure private sector plays. So it's not really organic growth. Do you think that's a risk to the Saudi economy?
I wouldn't necessarily call it a risk. I would call it a strategy. I mean, PIF has been very different to other sovereign wealth funds in the Gulf from day one, right? So they openly announced that they wanted to become the largest sovereign wealth fund in the world with $2 trillion by 2030. They are openly reporting balance sheets and financial statements, which is something with unprecedented in the Gulf. They are becoming very, outspoken and very open with their goals. And I think it's a strategy, honestly. I mean, if you look at the UK media loves to talk about Newcastle, right? So Newcastle was actually the first football club that was directly owned by a sovereign wealth fund. Because if you look at other sovereign wealth fund, other football clubs like Manchester City or Granada in Spain or PSG, they are all actually owned by family offices. So other GCC countries specifically avoided having the sovereign wealth fund pursue those investments. In the case of PIF, they are on purpose using PIF to pursue all those investments because they want to be on the media. They want to be on fences in golf all around the world with the name of PIF. But I think that is the strategy. I mean, it's the overall strategy of Saudi of attracting capital into the kingdom is using that strength of PIF to play into it. So again, I'm not sure it's a risk. It may be a risk if it becomes, one of a kind. or as you said, it crowds out the private sector. But I think it's definitely the strategy that they are following, and it's becoming very clear over the years.
Yeah, no, I was thinking like a lot of this is also to do with soft power, right? It's not just to do with, ROI or like investments. It's to do like how much soft power you have within, say, the Western world, right?
Yeah, exactly. And we have seen it regionally as well, right? So we have seen that soft power being played in places like Egypt, Turkey, but even Jordan, Iraq. So a lot of these funds, PIF, ADQ, QIA, they're using that soft power strategies to commit capital into these countries and have a stronger hand in the regional play and boards.
Yeah, like for example, with Saudi Arabia's drive to, with sports, bringing Cristiano Ronaldo to Saudi, buying all these different like sports teams and sports leagues. Why particularly sports do they feel is going to help their long-term ambitions?
I think it's in line with the entertainment and with a more benevolent view of the kingdom. As women are now driving in the kingdom. There are now cinemas in the kingdom. There are many initiatives trying to promote a better image of society in the kingdom, but also they recognize that sports play an important part in the visibility aspect that I mentioned before. So whenever they buy Cristiano Ronaldo or the array of players that they did, is basically betting on that visibility that they will gain by doing those actions. So I mean, we shortly after Ronaldo was bought, the four main clubs in the kingdom were put under the PIF. So that again is an example of how the PIF is leading the way and trying to be the prime and core brand, promoting all that. So we're talking about sports. I mean, this is football, golf, fighting. So MMA has been also playing an important role in PIF's investments, and esports. I mean, if you look at gaming, it is really unprecedented what they are investing into gaming companies worldwide. I mean, whether it's Nintendo or in Japan or they set up a proper subsidiary only for gaming. This is again unprecedented in the world of sovereign wealth funds, and they are publicly talking about it and announcing all the grand plans around gaming and sports in general.
Yeah, no, for sure. I think there's a lot of activity in these sectors. What about like things like EV? You've seen a lot of the Gulf sovereign wealth funds, like Saudi Arabia's with Lucid. I think Abu Dhabi's investing in NEO in China. To me, some of it seems a little bit like hasn't really worked out, right? Have there been examples of where sovereign wealth fund investments take time to realize?
Yes, I mean, EV is definitely something important for the future, and sovereign wealth funds appreciate that aspect. As you said, some of them have not been necessarily successful. I mean, Tesla in the early years got a lot of investment from the Saudis and some other funds, and they exited at a time that may have not been optimal. But I think over the years, they have built up this portfolio of international companies. So, as you said, in Abu Dhabi, ADQ recently financed the 3.3 billion investment into NEO in China. In the case of Bahrain, they recently completed the 100% acquisition of McLaren, which is also going through their EV journey. And in the case of Saudi, I mean, they got a stake in Aston Martin, which is also going through the EV journey, but also Lucid Motors, which at first it was very volatile in the financial markets. I mean, when the IPO went through, Saudi saw their portfolio of equities really rocketing. In the past year or two, it hasn't been as strong, but I think they remain confident on the prospects of Lucid, and more importantly, the play that Lucid may play in the development of a domestic portfolio. So they got their own brand now called Sear Automobiles, playing a role in the kingdom. And I think those investments that they have overseas are definitely going to play an important role in bringing the know-how back to the kingdom.
What are your thoughts on things like, EV manufacturing within the kingdom, for example? There's been a lot of Mohammed bin Salman was talking a lot about how he wanted like these kind of sectors to come and be Saudi made. Do you think that's like realistic, or do you think it was just more, for hype?
Uh, I mean, if it works in one of the GCC countries, it must be Saudi because, of the demographics of the country. I think it could work in a country like Saudi. In the other GCC countries, because of the demographics and the size, I really doubt it. That would be optimal. But in the case of Saudi, they do have the scale and the population to carry out that initiative. Obviously, and again, they will have to rely on best practices and international know-how, as we see it in hospitality or in any other sector in the Gulf. But I think with time, they can definitely pull it off.
Diego, there's two other areas I want to talk to you about. The first, I think you touched on this, was about transparency and governance. I think it's fair to say that within the Gulf sovereign wealth funds, or within the Gulf, generally speaking, institutions, transparency and governance is not as developed as, let's say, Norway or other jurisdictions. Do you think that's like a potential risk to some of these Gulf entities?
It could be. It could be. I mean, we pay a lot of attention to transparency and governance in general. We actually produce a scorecard annually, which is called the GSR scoreboard, and it stands for governance, sustainability, and resilience. So every year we assess best practices among sovereign wealth funds globally. And we always see when we do that, we always compare Middle Eastern funds with global investors. And we see that the governance, especially, is a very challenging aspect for sovereign wealth funds in the Gulf. I mean, I'll put you an example. We recently tried to assess whether having royal family members in your board was actually a best practice or not. And actually, most of the funds that were affected were in the Middle East, right? So if you look at any sovereign wealth fund in the Middle East, they all have majority of royal family members in their boards. And actually, three funds in the Middle East, which are ADIA in Abu Dhabi, Mumtalakat in Bahrain, and FGR in Bahrain as well, their CEO is actually a royal family member. So now you may argue that that doesn't necessarily have to be a problem, but the reality is that that they're definitely linked to the government itself. You find other governments around the world claiming what they call arm's length independence from government, and that's always perceived as a best practice. In the Gulf, that is always going to be a challenge. So even if they become transparent, even if they start raising capital, like in the case of Mubadala, Mumtalakat, and PIF, they are always going to have that challenge of governance because of the links to the government. So I don't, I am especially concerned about this aspect because I don't see it changing over time. You see other aspects changing over time, like sustainability. They're becoming more environmentally conscious. They become more transparent. But that aspect of governance, I don't see how it's gonna change in the long term.
Relating to your last point about sustainability, how can sovereign or how are sovereign wealth funds helping, these oil monarchies, these oil reliant, gas reliant economies decarbonize and reach net zero? I know the Norwegian sovereign wealth fund and some of the others in the world are pushing for sustainability, but within the Gulf, do you think like a lot of the sovereign wealth funds need to do more to help propagate or propel rather sustainability?
Yeah, I mean they're actually doing much better when it comes to sustainability. I mean, I mentioned our scoreboard before. When it comes to the G scores, so governance, then the progress is more negligible over the years. But when it comes to the S element, which is sustainability, the progress is actually quite meaningful. You have good examples of funds like ADQ and Mubadala in Abu Dhabi and PIF in Saudi being really at the forefront of that change. I mean, PIF has now a very capable ESG team that pursues, proper strategies, proper integration of ESG throughout the portfolio, and the same goes for Mubadala and ADQ. So I think they are definitely becoming more aware of the issues at hand and also becoming more aware of the opportunities at hand. I mean, ESG is not only a risk, but also an opportunity, right? So whenever you pursue an investment in a renewable project, people used to think that was not going to be as profitable as one in oil and gas. But actually, over the years, it has been proven over and over that it can be actually better. So I think sovereigns in the Gulf are definitely appreciating the risk, but also the opportunity of being more climate friendly and more aligned to the net zero or decarbonization of their portfolios.
Yeah, like if you look at some of these Gulf entities, like a lot of them are major shareholders within their own domestic banks, right? So they can also do this through capital deployment through the banking sector onshore.
Yeah, I mean, as you said, I mean, most of the local banks are actually owned or partly owned by the sovereigns. I mean, if you look at any major industry within the GCC, sovereign wealth funds play an important role. So whenever normally countries would commit to net zero as a whole, as a country, and then that would flow into the sovereign wealth fund because, as you said, the sovereign wealth fund has a hand in the whole of economy. So a country can only be net zero in the Gulf if the sovereign wealth fund is a net zero, basically. So I think they have an important role to play in the next few years for sure.
Yeah, like I was going to say, like if you look at the number of Gulf or Middle Eastern, by extension, FIs, financial institutions, and banks that are signatories of the Principles for Responsible Banking, which is a UN sustainability framework. It's not the only one, but it's probably the most famous one. The number of Gulf entities, I think there's only three or four for when I last checked. I think the main one was First Abu Dhabi Bank, which is obviously largest shareholders, so the sovereign. So yeah, no, definitely, I think that the sovereigns do play a role in this. As we bring the podcast to a close shortly, Diego, what kind of projects are you working on? Do you have anything interesting coming up?
Yes, absolutely. So we are working hard on our Asian exposure. So as you know, I recently moved to Singapore to boost our coverage in the region, but also our client base. So I think that's one of the key bets that we're doing lately. And then the second aspect of it is tech, so AI. I mean, we talked about AI before. AI is also very much affecting our industry and the way that we do data and research. So we are tackling that earlier rather than later and seeing with our developers how we can bring the best of AI into our products as well. So I think Asia and tech are gonna keep us busy for the next few years.
Fantastic. And Diego, how can people reach you or read your work? Are you active on social media as well?
Yeah, we are definitely are. I mean, our website is globalswf.com, and you got all the links down the homepage to our LinkedIn profiles, Twitter profiles, and anything else. So we also have a contact form in that homepage if people want to contact us as well.
Yeah, I'll put it in the show notes of how to reach you. But no, Diego Lopez, this has been really great. Thanks for coming on the podcast.
Thank you very much, Hassan. Appreciate it.